Hey everyone, CryptoVatsik. Thanks so much for tuning in. If you like this content, I would really appreciate it if you liked this video and subscribe to the channel for future updates. Nothing of what you're about to see is considered financial advice. These are just my opinions. Let's go. Okay, today we're going to cover HBAR, Hedera Hashgraph. We're going to go through my thoughts. I do like HBAR. I think it has a bright future, but today we're just going to go through my technical analysis here, my thoughts. So right off the bat, let's just mark off those key levels here. So one being this area of confluence that we had right there from these previous highs as resistance back in 2020, okay, until we broke to the upside, broke that major resistance on the macro time frame. And then ultimately that formed our area of support temporarily here before the capitulation, the kind of the unforeseen FTX event that happened, which we've now broken through. However, if we go back to this wick that we're seeing here, and keep in mind this is on Binance, we do see that essentially we're just doing a wick fill here, right? So this is a massive wick, area of demand down near the low, and ultimately we are testing that area of demand now at that low, okay? And so I do like to see that, and I think that that could potentially provide some relief in the short term. And so zooming back out though, again, let's just go back to some other key levels here, right? So the other key level being this one down here, okay? So we had multiple areas of support here when it first got listed on Binance, okay, pump and dump, and they came down, found some support, came back down, broke below for quite some time here, however, then made a massive market structure break, okay, with a nice bullish retest deviation here, but essentially what is a bullish retest of this level, and then accumulated for quite some time in this zone above that level, okay, which was a good sign that this level has confluence. And so ultimately this zone down here is that previous area of accumulation, which I am now pulling over all the way to where we are now. I always say plan for the worst, hope for the best. So this is essentially for me planning for the worst for more downside risk coming in the near future here, okay? And the reason is because, during this price action, this is upward trending price action. There's no real horizontal levels in here that formed over time, maybe temporarily here and here, but over time, really just nothing in here that screams it can bottom out from, right? And so you got to go back to those major levels, keeping in mind we're on the logarithmic curve, logarithmic chart right now, so it might look a little bit different if you're seeing it differently, okay? So in here is just really that inefficient balance in the price. It's kind of an upward trend, so we're really just full circle, doing a full lap. I think a lot of altcoins in the market will do this, where we basically have our cycle and we do a full lap right back to where it started. I don't think Ethereum or Bitcoin will necessarily do that, okay? But I do think a lot of the altcoins will when we start to look at the drawdowns when they have 90% drawdowns kind of thing. I don't think it's untypical for HBAR to see that, even though from this price here, it is a bit of a scary drop, another 30% potentially, especially if you're accumulating in areas like here or even up here, it can be scary. But, the thing is that's where the opportunity is, right? That's where maximum financial opportunity lives, is down in these accumulation zones. So if you can be patient and disciplined and dollar cost average and responsibly, that's a really good strategy to have. And I think that we're getting to the point where it's not a bad idea to start thinking about that and formulating your own plan. So I've talked about this though in my other video, my last video on Cardano, is I do think we're coming to a point where we'll see some relief. So it would make sense for this low potentially to hold for now and coming back up into this area of resistance, right? And so this is definitely now a ceiling of sorts of resistance. And I talk about these bear market ceilings that you will have for quite some time that seem impossible to break. And so, with that, we could see, a nice push up here potentially, but I would expect that we'd probably come down and at the least test this low again, but more realistically, starting to test some of this green zone in here for a real bottom potentially, okay, in later 2023. And I think we're starting to see that ceiling form already, which is a good sign, which means we're getting somewhat close to the bottom. But really, you can just look at this range up here, right? We had a swing high, down to a swing low. It formulated a range. So, if we start to trade back into that range, then yeah, I'll treat it differently, right? If we can really flip the bottom band of this range again, and that key level of support that was for some time that level of support, then I would start to look for a retest of the band, okay, bottom band, and I'll be targeting the mid-range and potentially these highs, and then depending on what price is doing, holding the equilibrium, target the range high and ultimately this high, okay? And so with that though, I do think then that would just mean to me that this is really our bear market ceiling, and this is a bear market rally. And again, I'd expect us to come back down and at least test these lows again one more time, right? Because that's what we see in accumulation. You see that area of accumulation being tested where it just seems impossible to break out of that ceiling for some time, and it bleeds people dry and they get frustrated, and they start to take their money and sell and capitulate and put their money elsewhere, and then they end up chasing pumps and not being patient, right? So maybe the ceiling is up there potentially, or in a few weeks, if we start to see this coming down into green quicker, okay, then it would lead me to believe that this is our ceiling somewhere up here, right? This area of resistance, which we could get a nice rally, tricking people to think the bear market's back on, ultimately failing and coming back down, more accumulation, okay, maybe even a second time, more accumulation, ultimately forming a true bottom down here kind of thing for an eventual breakout. I think late 2023 or even 2024 eventually, but that's going pretty far into the future, so we'll leave that alone for now. But the theory remains. Otherwise, if we do see some nice relief here, then we could say just furthers the time horizon for me to be looking at green. So maybe a few months instead, if we start to get some relief now, come back into these highs and then come back down kind of thing. So then we're talking, almost halfway through 2023 potentially. So there's just lots of different scenarios, and you have to play it right. And it's not a bad idea to start looking at responsibly dollar cost averaging. In my opinion, that's what I'm doing. Full disclosure, I had been doing it in here. So yes, I have some underwater positions, but that's why I did it slowly and responsibly, and I didn't dump in a ton of capital, so that if we do get prices like this, I'm ready to deploy and have a plan for that. But just like I said, if we get back inside this range, right, I'll treat it differently. But currently I'm treating it differently because essentially from way back here, okay, we had a range as well, right? So if you can see that, we had this swing high to the swing low, right? Essentially what is a range that we're now inside of from way back in 2020. And, I think it does apply. I think that we have to treat it as such. And, we're coming back down near the equilibrium here. So, in theory, some support around that area. So like I said, maybe come up to the upper band of the range that we're currently in, and then back down to the EQ. And then potentially I do expect a test somewhere down here of the lower band of that range. Okay. And so I'm just looking at that, planning for the worst, hoping for the best. I'm looking at that previous low, right? Because like I said, there's just not much right now in this price action here. There's just not much for me to say, yep, oh, there's some support temporarily here, that will bounce off of. Like, yeah, sure, we can bounce off of it, but you got to go to that major area of macro, accumulation, consolidation, confluence that price really respected, right? And that's this area right here, just under 3 cents kind of area, okay? Below that, I really don't know. I don't have an answer for you. Below this, things get really bad. Maybe something other event, capitulation event, or unforeseen event happens. I'm not saying that we can't see a wick down there temporarily with a V sharp reversal. It's possible. Anything's possible, but I do think that something pretty bad would have to happen, and maybe as a whole, or something fundamentally for HBAR. But either way, we'll just have to continue to evaluate this as price develops. I think a lot of altcoins are going to see something like this. It's not untypical for HBAR to see it. We've got a full cycle here and then full round trip right back to where it started. I covered this in my previous video as well, right? And it's kind of that theme of altcoins to come down 90+% in bear markets, right? Bitcoin and Ethereum might not do that. They're closer to 80, I think 80%, 85%, but the altcoin markets just get smashed, right? And so I wouldn't expect anything different for HBAR, and we'd be coming right back down to where the origin of this cycle really started, okay, from back in 2020. And I'm not as interested in trading these on the shorter time frame, just because the volatility is quite high, quite unpredictable. But if you were looking to trade this, ultimately you'd be looking to get in lower at these lows, kind of in no man's land right now. I'd really like to potentially it comes down a bit further and creates some kind of descending triangle, and then you get a breakout, and then retest if that breakout is your entry, target resistance up here, right? So yeah, it's a decent move. You could potentially 20-25% move kind of thing. You got to have tight stop losses though. Or potentially you look at a market structure break of this previous high here. Okay, so then market structure break basically being a flip of that level. There's your retest. Okay, risk your stop loss below, target again into resistance, depending on what price does. If you flip that, obviously target some of these highs near the EQ of that previous range up there. Teach their own. But right now is just kind of a difficult place to find an entry at this point. And ultimately, the trend is down, right? So we got lower highs, lower highs, lower highs. The trend is down. So maybe this plays out a bit longer into this trend, and then we get a breakout over here and retest, and then there's our bear market rally, something like that. But I would ultimately expect again that we'd be coming down to that green zone, okay? And at the least we'd be testing these lows again, for sure. At the least these lows, but a bear market rally can really trick people because it can really pump. Pump off the lows up to here is almost 100% potentially, right? So we're talking huge gains here in the meantime for bear market rally, right? So it just depends how this forms, how it plays out. You got to play it as it plays out, right? You got to play it the way price is reacting, and have tight stop losses, manage your risk, right? But on a shorter time frame, if price does come back down near these lows again, if it starts to come back down here, it's maybe worth taking a long stop loss below these lows here, okay, and then target the bottom band of this upper range, right into supply, right into this level of this previous support. Could be a good trade off the lows. You're talking 25% sort of thing. Stop loss from down here though is significant potentially, right? Talking 5% roughly. So at these levels, the percentage markups are different, right? They're more tricky to manage. So anyways, that's that's pretty much how I'd manage it right now. That's how I'm playing HBAR. Like I said, I like it for the long term. But again, I got to plan for the worst and hope for the best, right? You really got to keep this in mind. But have a long-term vision and don't get phased out, right? If you have bought in, I don't agree with the diamond hands strategy, but during times of accumulation, you got to be having the forward-thinking plan at the forefront of your mind, and be able to withstand those drawdowns and have that plan of attack. Okay, so that's just my opinion. To each their own. Please do what you are comfortable with. I want to thank you again so much for joining. If you do like this video, I'd really appreciate the engagement. Give me a like, give me a subscription, share with your friends and family if you found it helpful. Hopefully I was able to provide something for you. And, again, you can always follow me on Twitter as well at CryptoVatsik for pretty frequent updates. And yeah, I just want to thank you again for joining, and we'll see you on the next one. All right, bye.